Hello everyone. Today we are going to discuss about the topic auditing. In the auditing, we are going to see about audit procedure. First, let's discuss about what is meant by auditing. The origin of auditing may be tracked back to the 18th century when the practice of large-scale production was developed as a result of industrial revolution. It is found that some systems of checks and counter checks were applied for the purpose of maintaining public accounts, rather accounts of public institutions as early as the days of the ancient Egyptians, the Greeks, and the Romans. The history of auditing in India dates back to April 1, 1914, when the Indian Companies Act 1933 came into force. The act of the first time prescribed the qualification of an auditor. What is the definition of auditing? Let's discuss about the definition. As per Spicer and Pegler, an auditing may be said to be such an examination of the books, accounts, and vouchers of the business as will enable the auditor to satisfy the balance sheet which it is properly drawn up so as to give a true and fair view of the profit or loss for the financial period according to the best of his information and the explanation given to him and as shown by the books, and if not, in what respects he is not satisfied. And then another definition which is said by ICAI, auditing is the independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. Now, let's discuss about the procedure of auditing. The procedure of auditing may be classified as first one, preparation before an audit. What is preparation before an audit? The preparation before an audit involves the following steps. First one, scope of work to be determined. Before examining the scope of his duties, the auditor should discuss the nature, purpose, etc. of audit. Next, second one, knowledge about business. It includes the rules and regulations should be go through by the individuals. Next one, examine the methods of maintaining accounts. The accounts should be maintained properly and should be investigated by the auditor. And then the books of accounts which are maintained should be listed off. And then the system of internal check should be examined properly. Technical details about the business. Next, the profit and loss and balance sheet of the previous year should be gone through by the audit. Next, instructions to be carried out. First one, the books of accounts should be totaled up. All the vouchers should be serially arranged and filled. Next, the schedules of debtors and creditors should be prepared, and the list should be prepared according to the bad and doubtful debts. A separate stock sheet should be maintained. And then last, the name and address of managing directors, managers should be kept ready for the investigation purpose. Next, preparation by the auditor. Auditor must prepare the following things. First, the work should be distributed to the individuals. Next, audit program. Next, audit files on audit notebook should be prepared. And then audit evidence should be properly prepared. Next one, procedure. The procedure includes the following steps. First one, adoption of distinctive ticks. Auditor must should use distinctive ticks for various colors while auditing the books. Second one, routine checking. The routine checking involves checking of cast, subcast, carrying forward, and other calculations. Checking of posting into ledger, checking of cast and balances of various accounts in the ledger, and checking of transfer of balances from ledger to the trial balance. Next, the third step, it is test checking. It is otherwise known as selective verification. In the test checking, the auditor, through the process of sampling, selects the few items and if they are found correct, presumes that they remain are also correct. The next step is audit in depth. In this, the auditor examines thoroughly selected transaction right from their origin to the conclusions. The basic purpose of this type of audit is to see whether the system of internal check or control system is effective or not. Next, discuss about vouching. The vouching is nothing but it is an examination of transaction with sufficient underlying evidences to satisfy an auditor about the validity, accuracy, authority, authenticity of the records entered in the books of accounts. According to Taylor and Perry, vouching may be defined as the examination of the evidence offered in substaining of the entries in the books, including such examination the proof so far as the possible that no entries have been omitted from the books. The vouching is done for two things, vouching for cash and next one, vouching for trading transactions. The main objects of vouching are it involves collection of vouchers and related evidences. It involves evaluating the collected evidences and vouchers. It implies finding out whether entries have been properly made in the books of accounts or not. It implies finding out there is no omission of any records, and it also refers to checking the entries with a view to find out that transactions which are not related to the concern have not been recorded in the books of accounts. It forms the basis for final conclusion to be drawn by the auditor. Next, types of vouchers. There are two different types of voucher. The first one is primary voucher and second one is collateral voucher. First, let's see about primary voucher. Primary voucher means a written evidence in original is said to be primary voucher. Example, invoice for purchase. Next, collateral voucher. When the voucher is not available, copies thereof are produced in support. It is known as collateral voucher. There are some examples of voucher. For example, cash receipts, which includes carbon copies of receipts, contracts, minutes, correspondence, etc. Next, cash payments. The cash payments include invoices, bills, demand notes, wage sheet, salary, register, contracts, etc. Next, purchases. Invoice, goods, inward books, copies of order received, etc. Sales. Sales include copies of invoices, order received, goods outward, book, etc. Next one, vouching. Next, vouching or cash transaction. For vouching of cash transaction, following books have to vouch. First one is cash book. The cash book has double sides. One is receipt side and payment side. Let's discuss the one by one. Receipt side of cash book includes receipts from debtors, cash sales, interest and dividends, bills receivable, rents receivable, commission received, bad debt dividends, sale of investment and assets, other receipts. Another side is payment. The payment side of cash book includes goods purchased, wages, salaries, commissions, traveling expenses, establishment expenses, bills payable, partners drawing, capital expenditures. Next, petty cash book. Petty cash book means that the checks that are drawn for petty cash should be vouched from the credit side of cash book to debit side of cash book. Auditor should see the petty cash book has maintained on impressed system properly. The next one is bank passbook. Auditors should see the dates of deposits as entered into the passbook and cash book does not differ materiality. He should be alert specifically with regards to deposit made into the bank prior to the date of closing the accounts. Next one is withdrawals and payments from the bank should be vouched with counterfoils of the checkbook. Next one is reconciliation statement prepared should be examined carefully. Next one, the vouching involves purchase book, purchase return book, sales return book, bills receivable book, bills payable book, journal. The journals, which include various subsidiary books. Journal is used for recording those which items cannot be passed through any other book. Next one, verification. Verification is a process by which the auditor satisfies himself by actual inspection or otherwise as to the existence, ownership, valuation, and accuracy of the various items appearing in the balance sheet. Spicer and Pegler have defined verification in the following words. The verification of assets implies an inquiry into the value, ownership, and title, existence, and possession, the presence of any charge on the assets. Thus, verification means to prove the truth about the correctness and authenticity of assets and liabilities. Very often, vouching and verification are considered to be one and the same thing. A clear line can be drawn between the two. Vouching is to examine the correctness and authenticity of the transaction recorded in the books of prime entry, while verification is to confirm the value of assets and liabilities as shown in the balance sheet. Thus, an auditor has to perform the functions in verifying the assets. First one, to see that they are clearly stated in the balance sheet, and then he should ensure that their existence on the day of balance sheet. Next, to verify that they are property of the business and such they are free from any charge or mortgage, to satisfy himself that they are properly valued. Next, in auditing, various assets and liabilities are verified, such as the assets include land and building, plant and machinery, furniture, fitting and fixtures, small tools, motor lorries, vans, pattern and drawings. The liabilities include shares, debentures, bills payable, loan, outstanding expenses, etc. Next one, internal control. The internal control is best regarded as indicating the whole system of controls, financial and otherwise, established by the management in the conduct of business, including internal check, internal audit, and other forms of control. The internal control is divided into two types. The first one is internal check and the other one is internal audit. First, let's discuss about the internal check. D. Paula has rightly said that an internal check means practically a continuous internal counter checking system carried out by the staff itself, by means of which the work of each individual is independently checked by other means of the staff. The system provides for an independent and automatic scrutiny along with the works assigned. The method of internal check includes the four things. The first one is the work is properly divided in such a way that all the duties are assigned to different clerks. Next, the second one, the clerk get the work overload according to their capacities and qualifications. Next, the person does not perform any single task for the beginning to the end. The last one is the work done by one clerk is checked independently and automatically by another. The objects of internal check are to allocate duties and responsibilities of every clerk in such a way that he may be held responsible for a particular error or fraud, to minimize the possibilities of errors, frauds, or irregularities, to detect error or fraud easily if it is committed as in efficient system of internal check. There is a provision for independent checking to enhance the efficiency of clerks in a business as the assignment of duties is based on the principle of division of labor. Next object is to distribute work in such a way that no business transaction is left from recording. Next one, to prepare final accounts with easy and efficiency as an efficient system of internal check can make accounts more regular and reliable and to exercise moral pressure over staff. The difference between the internal check and internal audit. Let's discuss about the differences. First, the internal check. The internal check is an arrangement of duties. The internal audit is an independent review. There is no separate staff in internal check. A separate salaried staff is engaged in internal audit. The work of one clerk is automatically and independently checked by another in the internal check. The work of clerk is checked by an internal audit is known as internal audit. The internal check, the system of internal check is like a process. The internal audit, the work is just like a watchman. There are some principles of internal check. Let's discuss about the principles. The work of business should be allocated among us various clerks that their duties, rights, and responsibilities may be clearly and judicially divided, and there may not be left any room for interference. The distribution of work should be done that no single person is allowed to do a job solely by himself from beginning to the end. One person should be entrusted with similar nature of work. It is necessary for efficiency and specification. An efficient system of internal check must provide for automatic checking of the work of an assistant by another. The division of work should not be expensive. The business should not be relied upon too much. For making the system of internal check efficient and successful, use of self-balancing system should be invariably made. Labor-saving devices as cash register, calculating machines, time recording clocks, etc. should be made use of. There should be a proper system of filling vouchers, correspondence, etc. It is also necessary that no clerk should be engaged on particular job for long. Change in duties would become efficient, but if it will absolutely depend upon the circumstances prevailing before a business. Nevertheless, such a duties should be made without making it known to those concerned. The Institute of Internal Auditors has defined the internal audit as internal auditing is the appraisal activity within an organization for the review of accounting, financial, and other operation as a basis for protective and constructive service to the management. It is a type of control which functions by measuring and evaluating the effectiveness of internal check. The characteristics of internal audit are the system of internal audit has got an independent status in the organization. The system therefore maintains its independent position. Internal audit is totally free from managerial or executive functions. However, it may help in formulating executive decisions without actually taking part in such decisions. It maintains its regular watch and constant review over the accounting and financial matters. It make a investigation into any phase of activities of organization. Internal audit is a system of audit by the auditor who is employee of the organization, but he does not work under any sort of managerial pressure. There are some differences between the internal audit and independent audit. The internal audit is conducted by employees of the business. It serves primarily the needs of the management. The internal audit is aimed at improving and complying with the establishment policies and procedures. The work is done primarily in the light of operating functions. The main concern of internal auditor is with the prevention and detection of fraud. It provides a continuous review of business activities. An internal auditor is independent accountant but is not independent of management. He is appointed by the management. As such, he reports to the management. Next, the independent audit. Audit is performed by the independent professional auditor. It is conducted to safeguard interests of proprietors and third parties directly. It is aimed at ensuring the reliability of financial accounts and data. The work is subdivided primarily in the light of financial statements prepared by the business. The main concern of the auditor is to ensure that the annual accounts are correct and such he is incidentally concerned with the detection and prevention of fraud. The auditor is independent of management. Totally. He is appointed by proprietors and he reports. Next one, investigation of accounts. An investigation is an examination of accounting records undertaken for a special purpose. In effect, it is an audit of which the scope is limited or extended in accordance with the requirement of particular purpose. Its object is usually to discover and display the facts in such a manner as will enable the parties for whom it is undertaken to draw conclusions and make their decisions accordingly. The features of investigation are it involves critical examination. It conducted with certain specific objects. Factual information has to be given in analytical and descriptive manner. Scope of investigation may be limited. An investigator should keep the following points in view during the course of investigation. He should keep himself free from the influence of directors and managers for the business. He should familiar himself with all the important details about the business before the commencement of his work. If he necessarily, he should seek the assistance of technical experts during the course of his inquiry. He should confine to himself the purpose of investigation and keep details in regard thereto quite secret. The objects of investigation include when a person intends to purchase a business, when a new company wishes to purchase a running business or firm, when a person desires to enter into partnership firm as a new partner, when a person who wishes to lend money to a business and wants to know his financial position, when a person seeks avenue of investments, when a person wishes to make valuation of shares of a limited company, when the proprietor of a business suspects fraud, when it is suggested that the affairs of the company are not being properly managed. And let's discuss about the investigation and the audit. In investigation, it is carried on behalf of proprietor or third parties. The audit is carried on behalf of proprietor only. There is no legal compulsory for investigation. Audit is very compulsory. Investigation usually carried when the books of accounts are already subjected to regular audit. Audit are not required. Certain adjustments are to be made in annual accounts in investigation. Audits are not required. An investigator must not be a CA, must be conducted by practicing CA in audit. The auditor report says that the auditor is required to make a report to the members of the company on the accounts examined by him and on every balance sheet and profit and loss account and on every other document declared by the act to be annexed to the balance sheet or profit and loss account which are laid before the company in general meeting during his tenure of office. Such reports are known as auditor's report. The auditor's audit report includes whether in his or her opinion to the best of his information and according to the explanation given to him. In case of balance sheet of the state of the company's affairs as a as at the end of its financial year. In case of profit and loss account of the profit for the financial year. Next one, whether he has obtained all the information and explanation which to the best of his knowledge and belief were necessary for the purpose of his audit. Next one, whether proper books of accounts are required by law. Whether the report of the accounts of any branch office auditor under section 228. Next, company's balance sheet and profit and loss account dealt with the report are in agreement with books of accounts and returns. The profit and loss account and balance comply with accounting standards. Next, types of auditor's reports. The auditor reports may be of two types. First one, clean or unqualified report. Second one, qualified report. The clean or unqualified reports is one which the auditor does not insert any qualification or modification or reservation. Next, qualified report. A qualified report is one in which the matter referred to in it, the auditor should proceed the following qualification. For which item it is necessary to qualify report, whether the auditor is not satisfied with the particular matter of the company, or he is unable to express proper opinion on the particular matter, whether certain matters are so important that they affect the true and fair presentation of the affairs of the company, whether the matter relating to the qualification is concerned with the violation of an important provision of the Companies Act 1956. Thank you.